But one of the takeaways was that independent of what the Nifty does, specific sectors, etc. do, you will find the bazookas, which will actually have some meteorical growth in the next 4, 5, 6 years, etc. We didn't have time then to talk about what themes could these belong to. Hopefully we have about 3-4 minutes even right now. I'm just trying to understand, do you still stand by that view that the next 3, 4, 5 years, investors would have the chance, and you are finding those opportunities which could actually give between 30 to 50% CAGR returns for the next 4, 5 years?
It's quite possible, and I'm not too sure whether that would imply a 30 to 50% CAGR returns. The businesses could grow at 30 to 50%, but in some cases, a lot of that has kind of the valuations have priced in. So if not 30 to 50%, but even if it is half of that, that would translate into 15 to 25%, okay, which itself is a very, very decent set of returns for a long period of time.
Yeah.
It may not sound very exciting from a 6-month, 12-month perspective, but clearly from a 5-year perspective, if there is a range of businesses which give you 15 to 25% returns as investors, I think that's a fantastic place to be. So I clearly believe that yes, there are going to be pockets which will grow at north of 30%, which will translate into kind of, high double-digit, high teens, or maybe returns in the 20s.
Okay, a lot of people are invested, let's say, for example, in EMS, right? And the opinion gets divided. So, for example, today people would have been thinking that, okay, there is one house broker which is saying that they are constructive, but their target price on the top EMS player, Dixon, is 50% lower than the current market price. And there's another broker who's hiked the target price to nearly 30% higher than the current price as well, right? A 10,000 rupee gap between two targets can very well happen. We've seen this in the past. But the more important point is, from your perspective, is the growth into that EMS space, for example, high growth space, so I'm using that as an example, justifying the very egregious valuations that they're sitting on right now, or do you think something will give?
So, Niraj, probably on the EMS side, a lot of it seems to have got factored in. Okay. On the EMS side, and why I say this is because the valuations are kind of super high. Revenue growth will be there, but the margins are not good enough for you to be able to generate cash flows to be able to reinvest back into the business. The business to sustain that 30 to 50% growth rate will require a lot more capital, require a lot more working capital. And the margins are not so high that you essentially will generate internal cash flows to be able to fund that growth. So therefore, you will have to, I think from here on, leverage because the size has grown big, or you will have to raise equity capital, which will essentially be ROE dilutive. Okay, and that essentially is not a great place to be in. But if I were to kind of remove the E and just look at manufacturing services, it doesn't matter whether I'm making providing manufacturing services to make electronic goods, or my manufacturing services are coming into areas like defense, like aerospace, like semiconductors, where I still think we are in the early stage of the cycle. The EMS cycle is pretty much now already about 3 to 4 years kind of into it. It's out of the infancy stage. It's become a relatively advanced or a mature stage. But when you look at aerospace, defense, semiconductors, and some of the other things, that is where the entry barriers are even higher, margins are even better, and the runway of growth has just started. And we probably have another 10, 20 years to go before essentially this, even we can say that this has got mature, it's got advanced. So that's really where I would probably think within the area of manufacturing is where one should essentially be focused on, number one. Number two, I also believe that's a strategic priority for the nation, for the economy, because all of that helps you to indigenize.
Right.
So when we talk of indigenization or Atmanirbhar, it's essentially going to be these pockets which will help us to get towards indigenization. Even areas like, say, renewable energy, when you're making things for solar power, when you're making things for wind power, when you're making things for hydrogen, I actually look at it as indigenization, because what is that going to do? Import substitution.
Yes.
It will reduce your import of crude oil, reduce your import of coal, and make you shift towards solar, wind, etc., which are all indigenously produced sources of energy.
Right.
So I look at indigenization in a very broader context, and within that, manufacturing is going to play a very, very important role.